How's it going, traders? Welcome back to my YouTube channel. My name is Bestman Makri. If you're joining us for the first time, you're welcome to Traders Advocate, a channel built for struggling traders. And today's episode is no different from the goal of the channel, which is to help simplify trading. And yeah, it is a privilege. I want to say it's a privilege to be sat here with you guys, doing analysis with you guys. A privilege I'm not taking for granted, and I really appreciate the fact that existing subscribers, you keep coming back and you keep watching my channel. If you're new subscribers, I also appreciate the fact that you click on this video. Like I said earlier on, this is where we simplify trading, and I want to give you guys the best analysis for the week. Alright, so hit the subscribe button, the bell notification, so you don't miss out on our subsequent video. This is where we come and we preach the gospel. This is where we come and we simplify trading. No indicators, no AI, no hypothetical stuff, no best 1 hour strategy. We analyze the market before the market play out. If you didn't get my name is Bestman Makri. I'm a swing trader. I love trading. And yeah, let's jump into today's analysis. Please do subscribe, hit the subscribe button, the bell notification, and let's jump into today's video. Alright, so in front of me I have the EURUSD. EURUSD shall be anticipating the reverse of this immediate trend to continue with the major trend, which is bearish. The major trend is bearish. This guy pulling up here is an immediate bullish trend. It's a pullback that has run into a major area of resistance. Pardon me, let me clean up most of my levels so we don't get confused. Cool. So it has run into a major area of resistance. How do I know that this immediate trend should reverse, or how do I know that the pullback should reverse to continue with the major trend? So whenever you see an immediate trend or you pull back, once it runs into key areas of the major trend and you start seeing reverse or sharp pattern, expect a reverse of that pullback or that immediate trend to continue with the major trend. So this guy has pretty much run into this level and pretty much having issues breaching out from this level. So this was, we broke above this level, and in the opposite direction immediately we had a bearish engulfing candle close. At this time, this signified profit taking. So I just came here. So whenever I see price breach on a level like this, and in the opposite direction you immediately see a bearish engulfing candle, just come and put the resistance bar here and say to yourself, if price breaks above this resistance bar, we will continue keep going to the upside. Okay, so once we tried the first time and we had this bearish engulfing candle, I just came and put the resistance bar and said to myself, bullish engulfing candle, I'll going long here, but we tried, we couldn't break above this area, we closed below. But again, we didn't break below this area. Okay, so we came here, we balanced, we stood here, we tried again, we spiked below, couldn't source. This was a fake out. Now if you're joining for the first time, we made money from this fake out. So we saw the fake out, the pullback here, and we made money all the way down here. But I'm not interested in talking about previous trade. But if you want to know how we made money from this fake out, watch our 2 previous episode backward. You can actually see how we made money here. So I'm not interested in that. So we came back here and we stood firm. We tried, going all the way to the downside. We stood firm. Last month candle closed above this area, and this month candle is looking bullish. So from what I can see is we've pretty much, this is indecision. The market doesn't know if it wants to go up, if it wants to come down. So we are currently in a range. We are consolidating around this area, and this is the period most traders tends to blow their account. Most traders tends to abandon the strategy, because once the market started moving sideways and or the market go into a range, the average trader tends to struggle. The average traders tends to find it difficult to find tradable opportunity. Why? Because inside of a range the market can hard mad. The market can give you reason as to why it wants to buy, at the same time give you reason as to why it wants to sell. This is very normal inside of a range. Why? Because we have equal buyers and sellers. Okay, but I'm not here to dwell on people's pain or people's fortune or people's misfortune. I'm here to see how me and you can put money in our pocket. So once we came in here and we stood firm here, this just tells me we form what they call a double bottom. This is the first bottom, This is the second bottom. Okay, let me zoom in properly so you can see. This is the monthly time frame. This was the first bottom and this was the second bottom. Now double bottom is a bullish continuation sharp pattern. Okay, so far this candle stays bullish like this, we might actually experience a push to the upside because this is a double bottom that has occurred. So yeah, so the deciding factor will be the neckline of this double bottom. If I see a bullish breakout of this neckline, that means we'll experience a push to the upside. But if we fail to break above this side and we come out and take out this blue bar, we experience a decline to the downside. That is, we've respected this area, a decline to the downside should occur. Mind you, we also have this trend line causing issues as to why we haven't really blown to the upside. But for now, let's focus on this double bottom that is occurred. The double bottom is giving us the sign that a push to the upside is very much likely. Now if I go to the weekly, you will see that at the second leg of the double bottom, we form what they call an Himba's head and shoulder pattern. This is the left shoulder, this is the head, this is the right shoulder. Himba's head and shoulder pattern are bullish continuation pattern or bullish reversal pattern. They have the probability of reversing a trend from being bearish to now becoming bullish. So this inverse head and shoulder pattern is telling me that we should experience or expect a push to the upside. So this inverse head and shoulder pattern has pretty much violated this intraday bearish trend. Inside of the range, we had this intraday bearish trend coming to the downside, and this inverse head and shoulder pattern that has occurred on the major key level on a higher time frame has pretty much told me, look, expect a push to the upside. And this area that I marked with the black bar here is the neckline of the inverse head and shoulder pattern. So at this point, our mindset should be wired reversal to the upside. Why so? Because we pretty much form a reversal sharp pattern on a major level. As traders, we react to what the market is telling us. We align ourselves and we react to what the market is telling us. So now that I've seen this reverse head and shoulder pattern, my mindset is already wired reversal to the upside. Now on the 4 hours, I saw the breakout. We don't buy at the breakout. So this is the neckline of the inverse head and shoulder pattern. Let me zoom out properly so you get to see it. So this was the left shoulder, this was the head, this was the right shoulder. This area is the neckline or shoulder line, whichever way you call it, of that inverse head and shoulder pattern. So once we broke out of the inverse head and shoulder pattern, we don't buy at the breakout. Please never buy at the breakout. Wait for price to break out, then pull back for a retest of the inverse head and shoulder pattern. A bearish candlestick bounce from here, which we experience a push to the upside. Now I'm not going to come here and lie. Obviously, I saw the breakout sometime around Thursday, 9th of April, sometime around 2 o'clock. I saw the breakout, the pullback here, but I wasn't really confident in clicking the buy button. So I'm more of a breakout, a retest, then I go to the 4 hours time frame to draw my counter trend line. A break of my counter trend line, then I will start buying, but I couldn't find the waves to draw my counter trend line, so I just decided to sit on my hands. And what happened? Price has just pushed to the upside. But if you're in this trade, kudos to you. Kudos to you. So this is a breakout, a retest, a continuation to the upside should occur. So the next target for here would be here. So if you're in this trade, this area, once price comes into this area, you want to lock in significant amount of your profit, or if possible close out your trade entirely, because this is the area we tried breaching out before several times and we failed to break above. So when price comes in here, you want to lock in your profit entirely, so you don't give back what you've made to the market. But I really advise that you close out 50% of your position at the 100% retracement level. This was the area we broke out and we started reversing back. So lock in 50% of your position here. So if you bought somewhere around here, put your stop loss to somewhere above where you bought from, anticipation that price will just keep going up, because it is also possible that this can actually be a double top and price will just start coming down and your profit now turns to negative, and price may just start coming to even violate your stop loss. The worst thing that can happen to you as a trader is seeing your profit moves from blue to now negative, and even price coming to threaten your stop. That's the worst feeling that can happen to you as a trader. The average traders, once such happen to them, tends to struggle to keep their emotion in check, and one losing trade can open a portal of series of losing trades. So if you're in this trade already, lock in your first position, push your stop loss past above where you bought from. Anticipation your second trade will get to your overall target, which will be this area. Once price gets in here, or lock in your entire profit, because we can come here and reverse to the downside. It's possible. Alright, so but for me, who missed out on this trade, not to worry, not to beat myself. Yeah, I pretty much made money for this week or for this year. I pretty much made a lot of money trading for the year, and yeah, I'll be more concerned in going long if price comes. I see a proper monthly or a weekly bullish engulfing candle break of this area. If we break above this area, it just means that we experience a push to the upside. This area becomes our profit target. If I see a proper breakout of this area, because it was this area we tried breaking out from the first time. We broke out from here the first time, we came down, we tried again, we failed again, we tried again, we failed again. So it is no brainer we can actually come here and reject and start pointing to the downside. And if I'm looking at this properly, this might actually be a left shoulder, this might be a right shoulder. Maybe we'll come here and form a right shoulder and start heading to the downside. Okay, so the deciding factor will be the breakout of this area or the break below this area. If we break below this area, all fine and good, we align ourselves for a sell position to the downside. And if that should happen, once price comes in here, cool. So once price, if we fail to sustain this bullish momentum to the upside, we come out and take out this area, we experience a decline all the way into this area. But if we break above here, we are heading to the upside. So the deciding factor will be these two levels right here, these two levels right here. Yeah, so I'll be sitting on my hands, giving the market maybe a couple of weeks or months to decide what it wants to do for the EURUSD there before I'll start making decision. Like I said earlier on, the forex market is built in traders' favor. All we have to do is just be patient, allow the market to decide, and once the market decides, we align ourselves with the market decision, we'll make a whole lot of money. But if you're already in this trade, you caught the breakout, the retest of here, you bought somewhere around there, please lock any significant amount of your profit somewhere around there. Push your stop loss past where you bought from, in anticipation that we are coming here, because this guy can be a double top and price start coming, or I won't be surprised price start coming all the way to the downside. Like I stated earlier on, inside of a range, because we have equal buyers and sellers, the market can act irrational. That is, the market can tend to act mad. So you want to lock in your first position here, push your stop loss past where you bought from. Once price comes in here, and lock your entire profits. But if we can't do that and this double top stick, a decline to the downside will occur. Alright, so that's it for the dollar index. If you really enjoyed this video and this video has actually been very helpful to you, please hit the subscribe button, the bell notification. I will catch you guys in my subsequent video. And once again, my name is Best Man, the Thank you, peace and love. Do have a lovely weekend.